Imagine a perfect world where you can build a restaurant, open the doors, and make loads of money. Unfortunately, those days are over. It takes great leadership, hard work, and long hours to operate a successful restaurant. Together, we can make it happen. This is Restauranttopia.
Most people have applied for their PPP loans, and now what do you do with the money, and how do you make sure that you get the maximum amount of forgiveness? Jamie, thanks for joining us today. It's Jamie Romano from our sponsor, Hillcrest Food Service, and we also have Dave Ross and Anthony Hamilton with us here, also both from Hillcrest.
So obviously, what Jamie's going to be going over today is super important. And we did the webinar a few weeks ago on what the PPP money is and what it can be used for and some of those things. But now calculate what's forgiven and what's not and what to use it for. This is going to be really powerful information to make sure that, you get the maximum forgiveness for this loan. Because it's going to be important, to do that. Even though it is a small interest loan over 2 years but it can be a big, it could be a big nut for a small restaurant operator to not get the most forgiveness as possible. So I think it's important that, of what we're doing.
All right, let's get started. All right, thanks guys. So we're gonna be going over two of the available programs and how to maximize their forgiveness, the Payroll Protection Program, and then also the $10,000 or up to $10,000 disaster loan grant. So the first one on the Payroll Protection Program, we're gonna go over forgiveness. We're going to go over forgiveness if you staff your business exactly the same as you did prior to the virus, and then also reduce staffing so you can see how the forgiveness changes as your staffing levels go down. The first one, just to remind everyone what the proceeds can be used for. It's very specific in what you can use for forgiveness. It's payroll costs, it's payment of interest in a covered mortgage obligation, it's your rent, and it's your utilities. And then there's one more caveat, which is that the rent and utilities cannot be more than 25% of the forgiven amount. Now, the forgiveness also depends on a second piece, which is going to be a key piece, especially for restaurants, because as you've been operating potentially at lower volume, you probably have a lower staff number, and that's going to impact your forgiveness. So the way it's calculated is based on, people sometimes get confused when it says full-time equivalent. That doesn't just mean the number of people that work at your restaurant. The full-time equivalent is calculated as people who work a 40-hour work week. So for instance, if you have 2 employees and they work 20 hours each, that totals 40 hours. That is one full-time equivalent. So it isn't just based on the number of people that you have working there. It's a full-time equivalent, which is 40 hours worked in a week. The way that it reduces it is it compares how many people do you have on average in an 8-week period after you get your money for the full-time equivalents compared to, and you can choose which one is better for you, either the period 4/15 to June 30th in 2019, or the period January 1st to February 29th, 2020. You can use whichever one you want, so choose the lowest one when you go to do your forgiveness. So I wanted to run through here an example. So in this example, I have it pretty straightforward in that you have 15 employees. All of them make $1,000 per week. When doing the calculation, it came out average payroll of $65,000 a month. In this scenario, to keep it simple, there was no benefits and no retirement, as a lot of restaurants don't have that anyways. And then it came out to, when you multiply it by the 2.5 to get your total loan, you got $163,500. In this example, we're going to assume that you keep things exactly the same, meaning you don't lay anybody off. You have over here 15 full-time equivalents. Before, you had 15 full-time equivalents. Keeping the payroll exactly the same at $1,000 per week per employee, and then assuming that your rent for 2 months was $10,000 and your utilities was $4,000 a month, so $8,000 for the 2 months. does the calculation, you use up $138,600. So you borrowed 163, used 138,000. The remaining amount is 24,900. You've had the same number of full-time equivalents before as after. So you get 100% forgiveness of this 138, but you still have 24,900 left. So you can do one of two things, and this is where the planning comes and becomes key. You can either take the 24,900, use it as a low interest loan, or pay it back immediately if you like, or, and this is the part that I would recommend, you strategize in ways to use up that 24,900 so you don't have to pay it back. So what can you do? There's a couple of things. The first thing is, if you're in this situation and you're not on payroll, add yourself. There's no rule that says that somebody who was an owner who might not have been on payroll before can't add themselves now. And I would, in this particular situation where you have $24,000 left, I would add yourself at the maximum amount for forgiveness. The way they calculate the maximum amount for forgiveness is they say anybody who has a salary of 100,000 or less for the prorated 8-week period. I did the math for you. That comes out to 15,384. So if you're in this situation, you would want to take 15,384. You're essentially having the government subsidize your new payroll. Another thing that we're seeing is that restaurants are wanting to potentially reward their existing employees. There's been a lot of talk about employees making more when they get fired and go on unemployment as opposed to when they were working before, and that's causing some strife between employer and employee right now. So if you were planning on potentially giving your employees a bonus for sticking with you and working during this time, make sure you do it during this 8-week period. That's very important, because if you bonus them and say, hey, I'm going to pay you later, it doesn't get included. Another option, anytime you have some sort of work that's being done, if you can. Now, this may not be possible, but it's another potential trick. If you're going to have painting done, or you're remodeling, or you're cleaning, something that you might have a third party do, see if you can either have old or new employees do it and do it for payroll. So if you're going to get painting done, instead of paying some company a few $1,000s to come paint it, maybe you can have new or old employees paint it. You put them on payroll, that's forgiven. If you just paid some independent company to do it, it wouldn't be forgiven. And then this is a key thing too that we've seen. A lot of landlords, and hopefully this is the case for a lot of our customers, have been agreeable to rent abatement for maybe a month or two. You want to make sure that you get that abatement not during the 8-week period when you get the money. You want to get it later, like July or August. So that way you can use the funds towards rent in that 8-week period, and you're not getting the abatement and not getting the benefit when you do have the money.
This is important here too, because this is really a win-win in how to negotiate with your landlord. You're giving him cash flow now in these critical months, and it's going to help both of you out later on. So I've talked to several attorneys who have negotiated these types of arrangements, and were able to get maybe a month or two in the fall forgiven or abated, so they didn't have to pay those months, and then we're able to capture that cash flow in the future, while the landlord's able to capture that present day cash flow. Jamie, I got a question here from the audience. I think I know the answer to the first one, but I'll just read it so you can answer it correctly. Are you able to give raises to employees during the forgiveness period?
Absolutely. So you can give raises, bonuses, anything you like. The key, though, is to stay under this 15,384, at least for forgiveness purposes. Mm-hmm. So you can pay somebody more. You can pay them, say, $20,000 in that 8-week period, but the part that's going to count for forgiveness is capped out at 15,384.
You'd probably want to give them bonuses versus raises, so you didn't have that continued obligation through the rest of 2020. Or correct?
Yeah, I mean, I think there's going to be a lot of people that are going to be very surprised, even though individuals right now are making a lot of unemployment. Once that ends, there's going to be a lot of people that are going to be looking for work that potentially isn't going to be available. And you don't need to commit to a raise when potentially the economic sector is going to be a lot worse in the next coming months.
I have another question here. Great point, Jamie. After the second question here from Lindsay, after the time we closed, we had one payroll that I personally funded. Can I pay myself back for that payroll?
Your business can reimburse you, or you can take the payroll as the business owner. But for forgiveness purposes, it has to be in the 8-week period after you get your money. Reimbursed by the business for sure, or if you wanted to take payroll to be reimbursed, also allowable. But the only part that counts for forgiveness is going to be in the 8-week period after you get the money.
So as long as she's under that 15,384 amount, reimbursing herself, let's say can be forgiven.
Correct.
Now, Jamie, I have a question here. So you've got 15,384. Is that something? Does that matter how that is paid out? Is it need to be paid out weekly, or is it just any time during that 8-week period?
There is no requirement that you have to have weekly or biweekly payroll. It just has to be paid in that 8-week period. So you can be paying people for instance, even for back pay. So let's say somebody agreed to work for you because times were really tight at 50% wages, and you said, once I get the PPP money, I will reinstate you to 100%, and I will pay you back for that time when you were at the reduced rate. That's both eligible. So it's not like paying someone back in time. As long as it occurs in that 8-week period, it is also includable for forgiveness. All right, so here's the next scenario. So let's assume that you get the money, but you have to reduce your staffing, or you've been at reduced staffing, and you want to see what it would look like if you stayed at the reduced staffing. So in this case, what happened is we went from 15 employees down to 10. Everything else stayed the same in terms of the calculation. We had $1,000 per employee, but instead of having 15, we had only 10 of them. So our expenses for the 8-week period were actually lower. They were $98,400. What you're going to see over here is because our head count went from 15 to 10, that's a 33% reduction. We actually get a 33% reduction of the forgiveness. So our forgiveness is not the $98,400 that we spent. It's actually $65,600. That's this $98,400 minus the $32,800. That equals the $65,600. So when we, at the end of the 8-week period, we now have a loan of $163 minus the $65,000, which is $97,900. And that's where kind of the key comes into play of you have to decide what's more important to you in terms of preserving the cash or making sure that you get 100% forgiveness. So I wanted to show that from a cash flow perspective, what that looks like. So these are the two examples that we just went over. They both had the same loan amount. The amount spent on payroll was different, and that's because the 66%, you had a third fewer people. The rent and utilities were the same. The cash remaining, though, was $24,900 compared to $65,000. But look here at the difference. Here you have exactly the same amount of loan as you do cash remaining. Here you have a much greater loan than you do cash, and that's because you had the fewer full-time equivalents. So we want to make sure that, and it's okay to do it this way. It's totally fine. In this scenario, you are getting forgiveness of $65,600. So it's not like you're losing in this situation. You are getting 65.6 forgiven and paid for by the government. It's just when looking at the two scenarios, you do end up owing quite a bit more. But as you can see here, the ending cash balance is higher here than over here at 100%. So people have to kind of decide what's more important. Are you okay with having a higher loan, but maybe a greater initial cash balance for working capital purposes? Or do you want to work for complete forgiveness so that you don't owe anything back?
Jamie, we got another question from the audience, from Kevin from Cleveland. In order to qualify for the PPP loan, forgiveness must we have 80% of our staff still employed now, today, or 80% after we are allowed to reopen? If I get my PPP loan next week, should I still have those people employed today to qualify, or is it not until I get the money?
No, you can have them actually laid off 100%. Like, you don't need any staff right now. And then when you get the PPP funding, you can then rehire them. So there's no qualification that in the bridge time between application, getting the money, that you need to have a certain minimum number of people employed.
I think we got one more, Jamie. This is from one of the attendees. Do you feel there's a good possibility that they'll change the 8-week period, because a lot of restaurants are not open or reduced hours right now because of the Governor DeWine's order? This is for Ohio specifically.
Correct. So that is something that's been hotly discussed. There's been a lot of discussion about, are they going to be changing it? Are they going to be altering it? They were supposed to issue final guidance, the SBA and the Treasury, on the 26th, but they made no changes. And I would have thought if they were going to make any changes, they would have done it with the second bill, the second round of funding, that they might have changed it then. I will say that every restaurant lobbyist group in the country is lobbying to get it either extended from 8 to 12 to 16 weeks, or a different allocation. Instead of 75% payroll, maybe 50% payroll, and 50% not just rent and utilities, but all your other costs, your food supplier, your repairs, everything. So will it change? I wish I could say yes. I think you kind of have to operate under the guise that it won't until it does. The nice thing about this, that kind of Dave hit on earlier, is you don't have to pay people week one. So if you're looking at either not bringing on staff right away, or maybe bringing them on later, or you're not even ready to open if you've been closed, you don't have to make it happen week one. You can always open up week 2 or 3 and pay people back, rather than having to make that payroll commitment right away. And then if things do change, which you would hope, since we're already technically, I think people started getting money 3 weeks ago, at least some people, that if they were going to change something, they'd have to do it in the next week or 2. And therefore you'd have a better idea of if something was going to change. But I will say, and the best analogy that I got so far was that they're building the plane as that's taxiing down the runway. So could it change? Absolutely, because who knows with the way this is going, but I would not count on it or bank on it.
Yeah, I wouldn't put your livelihood in the hands of it changing. Yeah, I would plan for it to be this way, and if we get lucky and it changes, then that'd be great.
No,
I agree.
I agree. Jamie, so say my restaurant is closed, I get my funding, the 8 weeks starts today, and I have 10 staff members. I hire 5 at the beginning, and then by the end of it, I have 8 staff members on board. Do I get 80% as my numbers, the number of employees I have, or is it some sort of combination, a weighted average?
So it is, they are going to take an average, essentially over the 8 weeks, they're going to assume 40 hours is a full-time equivalent. So they're just going to take the number of hours that were worked. And so it's very important that your payroll company track that. So even if you have a manager and he's paid a salary, make sure, and a lot of managers work more than 40 hours in a work week, make sure that it's listed if they're working 50, 55 hours, so you get credit for that. They're just going to take the total number of hours worked, divide by 8 weeks, divide by 40, and that's how they come up with the full-time equivalents. They're not even going to really be looking at, was he hired in week 1 or 3? They're just going to be looking at the hours for full-time equivalents.
So Jamie, this is a lot of information to take in. Where can operators go for help? You know, it's like, this is such a profound amount of money, and if you mismanage it, you could really be in a hole. Are accountants helping out with this, consulting firms? So where do you go?
An excellent question, Anthony. So I would say, one, if anybody's interested, always feel free. I've been talking to customers either on email or phone all the time. Accountants or attorneys are also great resources. They hopefully are well versed in this. I can't think of a single accountant or attorney who hasn't made this their priority in the past 60 days. So definitely reach out to those types of people as well, or always feel free to come to me or to Brian. We've been kind of living this for the past month.
Yeah, we got some awesome questions flowing in. So I think this might be just another version of something we've answered, but it's good to make this completely clear because there's a lot of information. So we got a question here. If the staff is brought back on gradually with the goal to reach the full-time equivalent by the end of the 8 weeks, how or when is your full-time equivalent employee number determined for the loan forgiveness?
So they're gonna look at, in that 8-week period, how many hours were worked. So it's just going to be, if you're working, let's say you had no employees week 1, that's 0. No employees week 2, that's again 0. If you have 100 hours, then it's 100 hours. 100 hours again, now you're at 200 hours. They're just going to take the total hours, and then that's the calculation. So, and again, it's the number of hours, not the number of employees.
Jamie, we got a question. Lindsay asked, I thought the full-time equivalent was 30 hours. Is that for healthcare, or is? That's
correct. So the ACA has a different calculation. So when determining if somebody is required or eligible for healthcare, that's a different scenario. So say the governor doesn't reopen until the 3rd week of May. How do I figure out a mechanism to get the maximum amount of forgiveness, give the maximum amount of money to my employees, and reward them for coming back by still getting the number of hours? Are you referring to like having people work more hours?
I guess I'm trying to figure out, and again, I'm the attorney, not the accountant on the panel here. So how do I do that with the close time if I'm not able to go live right away and still is there a way to get 100% forgiveness?
There is a way, and the way that you could do it, and there's kind of a catch-all at the end that says if you rehire all your staff and pay them back wages, then it's all forgiven. But I wouldn't even want somebody to, because nobody wants to pay back wages just to pay them. I would see if you can find a way to either use it on the staff, or maybe more importantly yourself, so that make sure you're getting compensated, especially for those owners that haven't been on payroll. And then also trying to make your rent and utilities. There's a good question here too from John. It says, if you have no full-time employees and all are part-time, do they need to receive full-time hours? They do not. So the way that it works is if you have the part-time working 20, another part-time working 10, another part-time working 10, that's 40 hours. That is one full-time equivalent. So again, they're just going to take the number of hours that shows up on your payroll report from your payroll company or whoever's doing it, and just use the hours. And then there's one more question. What will they ask at the end of the loan to prove the payroll numbers? Okay, so it's going to be kind of similar to what you provided before, where you had to provide a payroll journal and a 941 form. So they're going to want to look and make sure that it's going to be from a third party, meaning you can't just provide an Excel sheet that says these are my people and these are the hours worked. They're going to want to see a payroll report that was generated that says, these are the individuals, this is how much they were paid, this is the number of hours they worked, and then this is how I did the FTE calculation. Okay, we got a few more coming in. All right, so next one. You mentioned that we should make sure the hours for our FTE should be on our payroll system. Should an owner pay themselves? Should they do the same? 100% absolutely. Make sure that you put in hours for yourself so that you're counted in the full-time equivalents. Also, in case you have been, a lot of restaurants are S Corps, the dividend distribution that you might be taking or have taken, that is not considered compensation. So make sure that if you're going to pay yourself, at least if you want the forgiveness aspect, you got to pay it through payroll. You can't just write yourself a dividend check. Here's one from Bob. If I pay back wages, will it affect unemployment benefits already received by the employee? No. So when, let's say you laid somebody off and then you hire them back and you say, hey, I'm going to pay you as like a bonus or back pay for when I let you go, it will not affect their unemployment benefits. The only time that unemployment starts, or I should say employment starts, is when you actually pay them a check. Whether it's for back pay or you're giving them a bonus for doing a great job, neither of that comes into play for unemployment.
So Jamie, essentially on that one, so that it doesn't hurt them for past unemployment, but once you pay them, they are now employed. Is that what I just heard you?
Correct. So
Okay.
So once you put them back on payroll, and to be honest, with the way the unemployment system is so overwhelmed, they're really going to rely more on people being honest. So let's say you put somebody and you had them furloughed and then you bring them back. They're supposed to notify when they get their little weekly email that, yes, I have gone back to work and my benefits should end. But I guarantee there are going to be people who are not going to check that and they're going to double dip. And because the Ohio unemployment is just so overwhelmed, they can't even get people to answer the phone, that I believe that there's going to be a lot of people who end up continuing to get unemployment benefits even after they start receiving pay. Now, they will have to realize, though, that when you file your quarterly payroll tax returns, your state unemployment return, which is typically done by your payroll provider, they're going to show up as having been paid, and it shows the number of weeks that they were on payroll. So if you hire them May 1st, and then they're on the pay for the next 8 weeks, there's going to be a state unemployment quarterly return that's going to say, hey, this person was on payroll for 8 weeks. So come July, when they're starting to reconcile, they're going to get a notice, hey, you've continued to receive unemployment benefits all the way through July, but there's an employer saying you worked for 8 weeks. We're going to need you to pay that 8 weeks back. One way or another, they'll figure it out. I just think in the short term, there could be some double dipping.
So Jamie, what you're saying is that if somebody ends up double dipping, they should just keep that money in the bank and not spend it?
This is an area where we can
in case.
This is an area where we can coach up the employees, though, and really advise them not to double dip, because they're going to spend the money and it is going to come back to haunt them. And it may not be until 2021, but it will be very unpleasant once they realize that they've accidentally overpaid this employee.
Well, not only that, but it's socially irresponsible, right?
Absolutely. I agree with Anthony.
Another question, if none of the employees were awarded unemployment, should they be paid back pay to both help them out and to achieve closer to 100% forgiveness? That's definitely an option. So if, I don't know particularly why they were not awarded, if they were just under the minimum needed to achieve unemployment. I will say if they just weren't awarded because they're pending in the system, they are going to get it, and it will be backdated, in case that's the question. So if there's somebody and they've been trying to get unemployment and they've been laid off for 4 weeks, they just haven't gotten it processed. When they are processed, they will go back to whenever they were initially laid off. and they will get back unemployment and the $600 a week. With regards to tipped employees, do they have to receive the same amount of tips that they are used to reporting for full forgiveness? That is a good question. So you do have to, in order for full forgiveness, they have to be receiving up 75% or more of what they made in the first quarter on an average weekly basis. So if they were making $1,000 a week before and you hire them back for full forgiveness, you have to hire them back at $750 or more. I will tell you that right now we're experiencing that restaurants are having to pay people much more than what they maybe initially were paying them when they laid them off, just because people have gotten their unemployment benefit and the $600, and it's been difficult to get them to come back. So yes, you do have to pay them at least 75%, but we're seeing that people are typically paying more than what they had to before in order to get employees to come back. Can you pay an employee ahead to get maximum forgiveness? Yes, you can. I would not say, if I were putting the records together, I would not say that I was calling it paying ahead. I would probably call it we paid them a bonus. But yes, you can, as long as you don't go over that maximum, that $15,384. That is the maximum that can be forgiven. You can always pay yourself or them more than that, but for forgiveness purposes, that is the maximum.
That's analogous to the abatement and landlord situation we talked about earlier, right? We're kind of displacing the monies now and then, taking the deferment later.
Correct. And here's a question actually about that, Anthony. Can you pay rent ahead? You are not allowed to pay rent ahead, meaning it has to be applied to that period. If you did not pay your April rent yet, that can qualify, but you can't say pay July and August in that 8-week period. So that's another reason why you want to make sure that if you're getting any sort of abatement, that you're getting it abated in a later period, not May and June.
Plus, for Jamie, just the rent, you can only use a certain percentage of the money for rent to have forgiveness anyway. So if you pay too much on rent or try to pay ahead, that's not going to help you, correct?
Correct. That's that 25% figure. So in the calculation, no more than 25% can be allocated towards rent and utilities to be forgiven. So to go over how you're gonna get this forgiveness done, at the end of the 8-week period, you're gonna submit to your lender your calculations, similar to that Excel sheet that I had, and then you're gonna back it up with your payroll reports, and if you pay a lease, your general ledger, and they may even come back and say, can you send us the canceled checks? Same thing with the utility obligations. Then you're going to certify that you're being honest and true and that what you've submitted is accurate. And then within 60 days, the lender has to get back to you and say, yeah, we agree with all your documentation and this is the part that's forgiven, or tell you no and why they don't. So then one more piece that's out there, the economic injury disaster loan grant. There was some confusion on this one that I wanted to clear up in terms of, this is the $10,000 grant awarded by the SBA. It was a part of if you applied for it, you could have applied for the disaster loan and or the grant. I will say now that they are out of funding for it. So if you did not apply for it already, unless they do another round of funding, it is too late to get it. Here's the reason why I put this in red for those of you that can see the PowerPoint. On the uses of the $10,000, it's similar in that you can use it for payroll costs, mortgage interest, rent, and utilities. But as I put out in red, they made it very broad, much broader than the PPP, in that you can also repay obligations that cannot be met due to revenue losses. So if you've fallen behind on your accounts payable, or you have had bills that you haven't been able to pay because of this economic difficulty, those are also eligible. So you have to use this in conjunction with the PPP, meaning that you cannot pay the same expenses. So if you have end up using $10,000, you get a $10,000 grant, and you get a $10,000 PPP, you can't submit to both that you spent, and you only spend $10,000 on payroll. You can't double dip and say that it went towards the same expenses. But because it has this broad repaying obligations that cannot be met, I would say I can't think of a restaurant out there that hasn't gone through some sort of revenue loss and difficulty in paying some bills. So this one, in my mind, should be a slam dunk in terms of getting forgiveness.
So on that one, Jamie, just any bill that I got in April that was the standard operation of my restaurant, I could use the $10,000 for that and get it forgiven?
Absolutely. And I think they actually kept it broad like this for that purpose.
Okay.
So that it has a broad interpretation, so that it kind of is a catch-all, whereas the PPP is very narrow in scope. The disaster loan and the disaster grant are both very broad.
So Jamie, on the slide before this, you mentioned that the lender is the one that's actually taking all your calculations for forgiveness and setting that up. Do you foresee any issues with lenders or just humans in general, that there's discrepancies? Is there a governing body that's going to, is the SBA going to be, moderating any of this, or is it just that you're up to the bank and how they?
I will tell you, I have never seen, and probably just because of how hastily it was done, we've dealt with on behalf of some of our customers, trying to help them. And I've seen different banks review applications and accept different answers. So for instance, one of the big issues when it first came out was, are 1099s includable? Now the SBA came out later and said, no, you can't use 1099s that you may have paid people instead of wages. But prior to issuing that, we had customers that got it approved and got loan amounts based on including 1099s. So it definitely has been different based on which bank has been reviewing it, how fast are they processing it, who did you get, which definitely isn't the way it should be, but I think it's just the reality of a brand new program that nobody knew was coming and kind of had to make up or interpret the rules as they go.
So are those people that potentially got a loan for higher than what they should have, is that even able to be forgiven? Or is that something that just because of the way the lender handled it, they're going to be paying that back?
Well, I mean, they can use it all up. So it's possible that if they either pay their employees or themselves and they end up using it all, that it will all be forgiven. But if they did get the higher amount, there is a chance that they won't use it all up, in which case, no penalty. You just can either pay it back immediately or over the 2-year period at 1%. Okay, so if you are your own landlord, can you raise your rent for the 8-week period? That's a good question. I would strongly advise against it. I know that could you probably slip it past? Maybe, but just on the compliance part, you shouldn't. You should pay your rent based on whatever your lease that you already have is, and not try to game the system. At least that's my opinion. I feel like if somebody were to look at that lease and then see that you did that intentionally, it could potentially be an issue for you.
Not to sound like a wet blanket, but there will be auditors reviewing this stuff, and I know that there's not going to be a ton of them, but they're going to make examples out of some people. So the language is pretty broad, but I would advise everyone not to play fast and loose, and get counsel from your accountant, your attorney, talk to people, and make sure it passes the smell test. Because if you're treading too close to that line, it's not worth it.
Yeah, agreed. Another question. I might have missed this, but where is the 15,384 number coming from? The number is the maximum I can spend on paying owners and bonusing employees. That number is the fact that in the PPP, they are limiting the forgiveness to those employees that make a prorated salary of 100,000 or less, and 100,000 salary over an 8-week period is 15,384. And again, you can pay yourself or whomever you want over that amount. It's just for forgiveness purposes, that is the only amount that is forgiven, the amount up to that. Another question, do you know of anyone receiving the EIDL money? Yes, I do know of a couple who have got it. They received it within the last week. I know that it's very frustrating because one of the great points about this was that it was supposed to be, the grant was supposed to be distributed within 3 business days of people applying. And we're into probably day 45 when people started applying, and there's a vast majority have not got it yet. I will say that they have a huge backlog, and they are trying to get through them. I know of some people who have, but the vast majority just haven't yet.
Jamie, could you repeat the dates that they're looking at full-time equivalents?
Sure.
You know,
So the dates that they're looking at, and you can use whichever one is more beneficial for you. So in this case, use the lower one. It's going to be 2/15 to 6/30 of 2019, or January 1st to February 29th of 2020.
January 1st to February
29th. So the
29th.
first 2 months of 2020. And then from Lindsay, absolutely. If anybody wants a copy of this slide or the Excel sheet that used for forgiveness purposes, happy to send that along. Just my email is up there, jromano@hillcrestfoods.com. I will send it to anybody who wants to have it.
And we could probably send it out to all the attendees. I believe Anthony can send it out.
Absolutely.
Then we got another question. What if my payroll is brought back up to 75% of the loan, but because I have to pay higher wages, my FTE employee number is lower? How will it be calculated? Okay, so there's 2 parts to the forgiveness. The first is how much money of the loan did you spend on the payroll, rent, and utilities? And then, so let's say in the example, it was 100,000 was your loan, you spent 75,000. That is the first part. So it says, okay, of the 100, I spent 75, that's my potential for forgiveness. If my FTEs are, let's say, half of what they were before, it takes that 75, cuts it in half. And so now my forgiven portion is 37.5, and the remaining portion is now a loan. And for Lindsay on the FTE calculation, they're going to take the number of hours worked divided by 40 hours, and that comes up to the full-time equivalents per week. So let's say, for example, you have 400 hours worked in a week. Even if it's 20 people working or 30 people working it, if it's 400 hours divided by 40, that's 10 full-time equivalents for the week.
This may seem obvious, Jamie. So say I have a kitchen manager, and he's on salary. Before this, I bring him back, and he's working 55 hours a week. Before, I may not have, captured that clock in, clock out. In this scenario, do you want to make sure that we do capture that now?
100%. Absolutely. So if you've been, some people might actually luck out here, because a lot of people, when they do a salary payroll, they just put 40 hours.
Yeah.
So if you were working that kitchen guy 50, 55 hours before, you may have been showing on payroll because he was on salary and people just default salary to 40 hours, that they were paying that guy 40 hours before. So he was 1 full-time equivalent before. Make sure when you do it now, you figure out if he's working 50 or 55 hours, you figure out what his hourly rate should be, considering the overtime, and then put that in so that when it shows up on the weekly payroll, it shows 50 or 55 or whatever he's working, not the 40, and it will give you a little bit of a boost.
This is a huge point because I just think standard practice, people are going to try to go back to what they were doing before. And, it's going to be like a grand opening at every single location. This is really a change of procedure, and you're going to want to track every hour that's worked.
And here's another question, which I think is going to unfortunately be a lot of the reality for restaurant owners, where it says many restaurants are working with considerably less hours of operation with a commensurate decrease in hours worked, total number of employees, and revenue. Should owners plan on having to pay a large chunk of the money back that is received? I would say potentially yes. Now, we don't know when the governor is going to open things back up for dining or what that's going to look like or any of that. But I do think that we have to be realistic in that if you've either already gotten the money or you're getting the money soon, there's a very good chance that you're not going to be at 100% operation going forward. So you have to either be planning either to maximize your forgiveness, in which case you're hiring the people back and you're just going to get through it, or you say, hey, I'm going to worry about my cash flow and just know that at the end of the day, I may have a larger loan that I got to pay back. And that's really kind of a personal choice that has to be made.
Jamie, I think this is also an opportunity, and we've talked about this on past episodes of Restaurantopia. Get that staff in there to do some painting, have them working social media, have them, handing out flyers, going door to door. That's probably a little bit tough right now with COVID, but assuming things open back up, there are things that staff can do to better your operation. Have them come in for training. There is going to be a lot of training associated with COVID-19 and what the consumer expects now from a restaurant experience. So I would say, although maybe you're only working from 2 to 8 and you're doing just curbside, things are going to change where you may have to work them an extra 3 or 4 hours a day in other areas.
Jamie, before we wrap up, first of all, great questions out there. Hopefully this was helpful to people to get your specific questions answered. But as far as the round 2 of the SBA loans, I know that there's probably a lot of people that applied and missed out because the money ran out on the first round. Are those people that applied the first time, are they first in line for the second round, or is everybody reapplying, or how does that work?
Okay, yeah, that's a great question. So 2 things to that. First is if you were already in the queue, meaning that you had already applied to the bank and they said, hey, the funding ran out before we could get you an SBA number, then yes, you are in line, but I would definitely confirm with your banker that that's being processed. If for whatever reason you just didn't get the application done in time or weren't aware of the program, whatever that may be, definitely apply now. And I will tell you that $60 billion of the program was carved out for community banks and small lenders. And that was done on purpose. So if you have not gotten your loan or haven't applied yet, I would strongly encourage you to go at the community bank level, because I found that they are much more nimble, and because they have money allocated directly to them, they have the ability to take on a lot of these loans without. One of the big deals that we've seen is that if you're a small fish applying at like a Key Bank or a Bank of America, you're getting put to the back of the line because the lenders are getting paid on a sliding scale based on the size of the loan. So of course, that's why you hear about all these $10 million restaurants and public companies getting all these loans, and how do they get put to the front of the line first? Being realistic, it's because the lender got paid a much bigger fee on that $10 million loan than they're going to get on your $150,000 loan. So I think you've got to take advantage of the smaller banks that aren't going to have the $10 million loans and the big companies that really shouldn't be applying anyways. and use them to your advantage. Now, if you've already gotten your loan, no big deal, no sweat, or if you're already in line, don't switch it. But if you haven't and you want to take advantage of it, definitely see if you've got a community bank out there that will process it for you. With the 10K grant, is the timeline to repay the same as the PPP? It's not. In fact, I would say that if anybody takes the 10K grant and is not able to use it for full forgiveness, I would be stunned, just because of how broad it is in terms of what you can use it for, with being able to repay essentially any obligations that you had, or payroll, or rent, or utilities. You would potentially have to pay it back, not over the 2-year period, but once the period is over. But to be honest, I can't think of anyone that's going to be paying it back, just because if somebody took the funding and it's so broad in scope, you'd have to really just have had no expenses at all.
Okay, great. So as we wrap up here, again, thanks everybody for the awesome questions, and we'll be sending out to all the attendees this PowerPoint as well as the Excel template, so that you can kind of plug in your numbers and get that done. And again, if there's any questions or anything you guys need, please feel to reach out. Jamie's emails here on the PowerPoint, and also on restauranttopia.com. Anthony, any closing comments?
One day at a time, guys. One day at a time.
No, great point, Anthony. We had some great tips on mental health in our last episode of Restauranttopia. And I want to thank Jamie for such a great job today, and our sponsor, Hillcrest Food Service. Without them, we couldn't make this possible. So really appreciate that. And all our attendees, great questions. Fantastic. Really hope we're able to help people. And if there's anything we can do for you, please reach out to us. We really want to see you all get through this, and we will, and we'll get there on the other side.
Yeah, thank you so much for attending.
Take care, y'all.
This is a high quality pod.
Thank you, everybody.
Take care. Adios.
Thank you for listening to Restauranttopia. The gratitude that we have for each and every one of you spending your precious time to listen to this podcast is immeasurable. Please make sure to tell a friend about this podcast. And also, if you have any feedback for us, visit us on restauranttopia.com and drop us a line. You can also subscribe on your favorite place to listen to podcasts. Thank you, and have a great day.
So
well, hold on. Our audience loves dead air. You don't want to do just dead air?
we could, we could definitely.